All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia. I'm the founder and CEO of Gar Capital. It is Thursday, August 31st, 2023. It's 9 a.m. You know what time it is. Time for the Morning Note here on the YouTube channel. If this is your first time here, make sure to hit that subscribe button, like our videos, comment any of your questions. Really do appreciate the support as always. Let's go ahead and get started. Dow futures are up 157 points. NASDAQ up slightly, 0.05%. S&P 500 futures 45.33, 19.10 for the Russell, up 0.21%. The dollar index is up this morning as well. So, remember that one-for-one correlation. We talk about that. It's not always true. The dollar being one of them. Yes, the dollar can be up and stocks can be up. 103.47, up 0.31%. Volatility index 13.8%, 13.8, excuse me, down 0.5%. On the VIX, we'll chart that here in a second. 10-year yields continuing to pull back, flirting with 4.1% on a 10-year Treasury bond yield. 82.72 on crude oil. As we know, crude oil did hit a golden cross on the daily, so we want to keep an eye on crude oil. The level we're looking for is 85 on the daily. Gasoline bouncing back up 1%, $2.59. Gold is flat, 1972. 24.98 for silver, down about 0.47%. Copper down about 0.17%. Euro dollar down about 54 pips, 108.69. Dollar yen is down 37 pips, 145.86. Even with the dollar being a little stronger, the yen catching a bid. 126.84 for the pound dollar, down about 32 pips this morning. Bitcoin futures are up 0.18%, 27,310. 1710 for Ethereum this morning on the futures contracts, up about 0.38%. So that's where we are. We did get some headlines this morning. Let's go over them. First thing I wanted to bring up was S&P 500 futures. And I placed a note here on the blog. And we're going to go from top to bottom. Let's start with the most important stuff. Let's hear. July core PCE, this is the Fed's preferred inflation gauge. That is up 4.2% year over year, with the expected number being the same, 4.2. Not exactly a big market mover. Consumer spending did beat 0.8% versus the 0.7% forecasted. Initial jobless claims, 228 versus the 230,000. This is the lowest jobless claims number in 4 weeks. Continuing claims is still above the previous week, around 1.725 million in terms of continuing jobless claims. That was the number. NASDAQ futures just went red. We were long NASDAQ futures. We got out basically at break even. S&P futures we caught this week, but NASDAQ's been a tough one. So this note I posted as well. I said, don't forget Team Tomorrow's Friday with the non-farm payroll jobs number being tomorrow at 8:30 in the morning. We're also ahead of a long weekend. Monday, the market is closed with Labor Day. Understand that. We need to get our money and wrap it up. So that's kind of what I'm looking at. Any new positions will have to be for next week. But again, even if we do options, we're going to lose a day. So we're going to keep it very research, observing, learning focused for the time being. This keeps us from being antsy and risking capital when it doesn't need to be. I'll post some webinars and some quick breakdowns on things I see on the workshop and webinars channel. That is here on the Discord. If you are a server member, it's available for all. This is where I placed the options trading videos that I made in 2019. I'm going to remake this, a lot more information. So again, that's in the process. But again, any kind of new webinars I'm going to do. I haven't done the morning routine webinar as of yet. Kind of want to get a little more news flow. More than likely, I'll be done tomorrow. But anything extra that I see or I want to do a video on, I will post it on there for you guys. So just keep an eye on the blog for any news updates on that. So really the idea is to just kind of be patient. Let's take a look at S&P 500 futures this morning. 45.50 might be it, especially with drawing liquidity as we're getting into the long weekend, as I talked about. I don't love this candle here, right here. I don't like this. So again, that's not the best candle. That could be actually a change of trend, at least short term, if we ended up this way. 45.50 is the resistance target. I would be surprised if you break above it this week. I think that's probably the best you're going to get, and then you're probably going to chop around. Really, the level we're looking for as traders to hold up is 44.92. That's your 50-day. It's still bullish price action. Nothing has really changed. It's nice to see some good price action to trade. But again, 44.62 is your 20. So as long as we stay above the 20 on the S&P, I think we're fine. But I wouldn't want to trade intraday going into Friday, going to this job sprint, going into a new month. We may get some rebalancing, end of the month rebalancing, so for some funds. Maybe that bonds catch a bid today, so maybe we might see yields pull back a little bit. Maybe some traders takes their profits on shorts, and then we get a little bit of a squeeze. Maybe that's what this was. I just think there's too many variables out there where we're not sure on how much volume we're going to get and how much liquidity we're going to have. All it takes is one drain, and then that's it. And then we're kind of stuck with only 1 day expiry. So again, we kind of have to look at a risk-reward perspective. Not the best here. So it's my opinion that we want to start closing stuff. We want to get out of things. We don't want to open new positions. It really doesn't make sense here. I just don't want to throw capital away for just no reason. We don't need to. So again, let's say if we get to around 45, 41, 45.50 seems to be right about it. 45.60 being that peak that we had about a month ago. Well, maybe about 3 weeks ago or so. That was on beginning of August, end of July. Yep, that's around that time, 45.60. And look, we made this all back from the the Jackson Hole and everything like that. So good stuff all around. But I think we're probably running out of gas here, guys. It's hard to say. Good morning, boss Mara. Mara, as we know, big pop with that grayscale ETF on Bitcoin. Above 1450, that's where it gets interesting. Again, all of this is trying to just make back. We've been trading Mara for a while now, and there really isn't much to do. That was really just headline based. The good news, it is above the 20-day. Let's see if it proves to us that we have more price action to the upside before we get in. And again, I don't think investing in Mara really makes a lot of sense when you could just buy Bitcoin outright without any kind of expense fees or anything like that. Looking at QQQ, very similar price action. Kind of getting to the top here, but we do have a gap to fill. This is on the hourly basis. So if we go to the daily, this is what stands out. Again, above major moving averages, beautiful candles on the daily. The daily candle on Qs, we just have to see how we open up. But if we look at NQ, you can see that we broke that neckline resistance that we were expecting, possibly a right shoulder. The right shoulder formation being a little more down. And we didn't get that. So the question is, do we get a little more of a push? 15.5 seems to be that kind of magnet level for NQ. If we look at QQQ, what level would that be? That would probably be where we are now, around 376 to 375. But right now we're at 376.85, so kind of holding up well. Salesforce is boosting the Dow and is helping slightly on NASDAQ. But again, we have to see if this gap does fill on the daily. I do have the QQQ 380 calls. So the good news, guys, is that Qs is green aftermarket. The question is, does it hold up? So that's really the issue I'm looking at. Could this be resistance here on the 1 hour? I'm going to watch it very, very closely. We hit 20% twice yesterday. Let's see if we can catch maybe a little bit of a rally. If we start getting to the 379 area to 379.34, we don't need to wait for that 380.66 gap fill exactly. Again, we want to take our chips and we want to call it a week, because anything could change that quickly, especially if we get a liquidity drain or anything where volumes get very, very dry and prices start falling incrementally. Not exactly with one momentum strike down. It's going to be just slow chop down, which is even worse. That helps nobody, even if you're short. So that's kind of what I'm looking for. In terms of the dollar, this is what stands out in terms of risk, at least in the short term. You can see on the dollar on the daily. Remember, we talked about that in July 15th. I said that we would get a dead cat bounce on the dollar. Now, quite a dead cat bounce indeed. But still, in terms of dead cat bounce, we'd retested basically the levels that we had in May. So now the problem is that we have the 20 and the 200 right here crossing, and we're bouncing. We need this to break down for stocks to go higher. We're retesting a key trend line here. So the question is, we have been above it. Does this become a pivot point for more upside, or this becomes resistance for us where we pull back down in the dollar? I think it's more of the latter, not the former, meaning that this is more resistance than anything else. I just really want to slice those moving averages and just call it. And then we don't have to worry about the dollar, and we can retest those lows right around 100 level. And if we knock on that door again, we'll more likely break it. But that's what I got for this morning, guys. We'll keep it tight. I'm not going to add any new positions. I don't see any real reward out of doing that. We want to get out of queues today. So again, that's going to be my focus. And anything changes, I will let you guys know on the blog. Thanks again for being with me this morning. Have a great rest of your day. I will see you guys tomorrow for the morning note. We'll go over the non-farm payroll report. We'll see how this market action is continuing. Do the bulls make it another day for the streak for more upside? We'll see. Have a great rest of your day, guys. Cheers.